I have these following questions about financial goals and investment objectives.
What are those questions?
What are the capital reserve requirements of general rule for investors?
Well, as a general rule, most people should have a cash reserve at least for 3 months worth of living expenses. I would say 3 to 6 months worth of living expenses. Now, these capital reserves should be kept in a safe, liquid investment such as bank account or a money market fund. Now, where a client income is unpredictable, it's always advisable to maintain a larger cash balance.
Where should we invest for liquidity?
Liquidity. Okay, so most of the time, or investors, they need a significant amount of funds, or basically they want to have access to their funds within a short time period. So money market funds and T-bills, they do provide lower return, but these investments are considered liquid.
Where should we invest for preservation of capital?
Preservation of capital means protection of their primary capital. Now, investors, those are concerned with the potential loss of capital, will invest in securities that provide safety. They don't want to put their investment at great risk, and usually they like to invest their money in US government securities or some insured certificate of deposits or money market funds.
What are the good investments for current income?
Current income. So most of the investors, usually they're retired when they want to live off the current income of their investments, and the current incomes, they basically are interested in producing a steady and reliable stream of income. Now that would be coming from either in form of interest, dividends from preferred stocks, or dividends from current stocks, or also from fixed annuities. Now the downside to the income investment is that they usually produce a little and growth of the original amount invested, and they cannot keep up with the inflation because the purchasing power erodes over the period.
Where should people invest if they have high marginal tax rates?
Oh yes, where the investors, they have substantial amount of income and they have a high marginal tax rate, they want to invest in some investments where they could do tax deferred or tax free investments, or usually tax exempt. Now municipal bonds are a great way of doing it, and the other investments such as annuities or traditional IRAs, they are tax deferred, and the people, they fall in a higher margin tax bracket, they can put their money in those investments.
Where should growth investors invest?
Growth investors, they basically want their capital to appreciate. Okay, so these kind of people or these kind of clients, they expect the capital will grow at a higher rate than other investments, so they are usually like to invest their money in risky assets. Risky assets means they want to put their money in common stock or some equity mutual funds, and these are the examples of growth investments.
What to do for speculative gains?
Usually speculators are gamblers. Speculators, they like to do day trading. They trade in a margin account, or they invest in asset class such as derivatives like options, hedge funds and futures, and smaller micro cap stocks. They usually want to earn money through their efforts. I mean, by their efforts means they want to do day trading, they want to maximize, they take higher risk, and they have a sufficient financial resources to bear any sort of losses, and they just want to verify that, they just want to make sure that they are earning through their money, but with risky investments.
Okay.